Hey, welcome. It's Sarah Larby from Everyday Investor, producer, and guest host. I'm excited for today's episode. One of my favorite topics is short-term rentals, but especially in cottages and recreational properties because you get to enjoy it at the same time as making a great amount of money. And these returns that you're going to see today are going to be very fascinating. We're going to bring James Svetec, who wrote the book Airbnb for Dummies, and we get into the nitty-gritty, all the details about this awesome strategy. So stay tuned.
After renovation, we want to accommodate at least 8 people comfortably. So that generally means at least 4 bedrooms and at least 2 bathrooms, ideally larger than that. And then we also want the property to have access to a lake.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
My name is John Timbrink. I'm the owner of Blackjack Contracting and reicontractor.ca. My tip of the week is about the due diligence process before you make the final offer on the property. I think it's really important that you go into the purchasing of that property, about to your project, with the best information possible. I highly recommend that you do a virtual walkthrough or a virtual consult, or a real one if you can get into. With this buying market, you never know. But if you can do at least a virtual one, you know that you can go into confidence that you'll have a rough budget for your project. With the supply chain issues and COVID still rearing, costs are still high and timelines are still really long. So if you can go in with knowing the best information possible, it's only going to lead to success.
Welcome back. Before we bring in James, let's find out what's happening in the world of stocks with Omar Khan. Omar, over to you.
Hey guys, Omar Khan here with Theta Trading and the weekly market update. Now, the markets are off to a really rough start to begin the year. All major indexes are off a substantial amount. Now, the concern that the market has right now is inflation and interest rates. Now, why is that a problem? Well, interest rates and inflation would signal a slowing economy, perhaps even a greater problem, runaway inflation. And also, companies' ability to earn more profits in the future could be severely curtailed by rising interest rates. Also, maybe consumers won't spend as much money. The bottom line is it's a lot of uncertainty. And what the stock market doesn't like is uncertainty. The stock market is a forward-looking mechanism. It's looking out forward 12 months, and it's seeing all the potential problems that could occur. It prices those in today. Now, that's what we're seeing now. Ultimately, what drives stock prices higher or lower are earnings. Now, the earnings of major corporations are about to come out this week. If they come out really good and the market reacts positively, then we should be in pretty good shape. If not, more repricing could be in place. Let's see how it turns out. We'll see you guys next week.
James, excited to have you here. You are an inspiration to many. You wrote the book, Airbnb for Dummies, which was also a great book to get tons and tons of information. But tell us a little bit about you and how you got started in real estate investing.
Yeah, for sure. So I got started investing in a bit of a roundabout way. So I started out actually managing properties on short-term rental, and then did that for a long time, started teaching people how to do that. And then a friend of mine, Riley, has been a full-time real estate investor for about the same amount of time that I've been managing properties on Airbnb. And then the two of us just kind of sat down and we're hanging out one time. I was talking about Airbnb, he was talking about real estate investing, and then naturally we started investing in Airbnbs together. And so that's kind of how it all came to be. And we got started actually buying properties for short-term rental.
Amazing. Now, where are most of the properties that you're buying?
In the Kawartha Lakes area. So we're buying properties in cottage country, about 2 hours, 2.5 hours outside of Toronto.
All right, awesome. I have a couple in cottage country. I'm working on a resort, which is awesome. Why cottage country versus, somewhere else in the suburbs as an example? Why did you go that route?
For us, there was a few big kind of selling features, if you will, about cottage country. One was that it's not really impacted by a lot of things that other areas are impacted by. So for example, COVID being like the biggest one, we saw that when international tourism slowed down, domestic tourism sped up. So we saw it as being really robust. And then from a regulation standpoint, it's also really nice because in the areas that we're buying, we specifically look to buy in towns where the economy relies pretty heavily on short-term rental. So the first property we purchased was in Buckhorn, and their population grows massively in the summertime just due to short-term rentals, and that's what kind of supports their local economy there. So regulations are really favorable to short-term rental, and it's very likely they're going to stay that way just because the economy can't really survive without it. And then the last big kind of selling feature for us was just that the income you can generate relative to the purchase price was like that ratio is just so much better than in a lot of other areas.
What are some of the things that you look for in an actual property to say this is going to be a good Airbnb option for the cottage rental?
Yeah, we have a few things on our kind of list of criteria. The analysis that we run, we use data from short-term rental websites to figure out how well the property can perform. So obviously the analysis is a big part. But our kind of more standardized criteria are after renovation, we want to accommodate at least 8 people comfortably. So that generally means at least 4 bedrooms and at least 2 bathrooms, ideally larger than that. And then we also want the property to be to have access to a lake. It doesn't necessarily need to be on a lake, but as long as there's access so that the guests can go and take a kayak and drop it in the water, or stand up paddleboard, drop it in the water. Ideally have a view of the lake, something like that. Probably the most important one though is that capacity, because what we've found is that when you can accommodate more guests in the property, suddenly you can charge a way higher nightly rate because people are able to split the cost amongst a larger group of people. And then you just have a lot more flexibility to keep the place booked up all year round because you can accommodate, you basically access the entire pool of demand, let's say. It's like you can accommodate 8 people, but you can also accommodate 6 or 4 or even 2, depending on the time of year and the amount of demand for it. So we found that really helpful for, like, we just find that we get the best returns and that the data shows that the best returns will come from those larger properties.
And you talked about pricing a little bit, and I want to go back to that because there's high season, there's mid season, and low season. Can you define that, what that looks like in cottage country? What is high season? Roughly for an 8-person, 4-bedroom property in the Kawartha Lakes, what are we thinking like cost per night would be high season, mid season, and low season? If we can go through that just to give everybody listening and viewing a bit of an idea on what that looks like.
For sure. So we personally use a very data-driven pricing strategy where we're looking at supply and demand and dynamically updating our prices based on what our goals are for each different month of the year. And so we're constantly measuring how, like right now, we're looking forward to, like it's January right now, we're looking into March and April, and we have targets for where we want to be in terms of bookings for March and April right now. And so we're making micro adjustments all the way along. So pricing is very variable even within season. So like in the summertime, we really wouldn't drop below $500 or $600 a night in the high season, but it can go up to, I think the most we got in high season was $1,600 a night for the property. And then in mid season, we're generally around the $400 to $600 a night. And then low season, we're going as low as $300 a night, but then you kind of get like one-off nights that are weird where, for example, New Year's Eve, we ended up getting a 3-night booking for that. And the New Year's Eve night was booked at $1,600 a night again, just because it's such a great spot, high demand. Obviously a lot of people want to get out of the city and celebrate New Year's with a bigger group of people. So it can really fluctuate quite a bit, but that it can range really anywhere from like $300 to $1,600 a night.
And what about occupancy levels? So like the prices are going to change a little bit, like, based, on you being here and doing this for a little while now. Do you notice like maybe like a certain percentage of occupancy per month on high season versus low season? What does that look like for you?
Yeah, occupancy rates, we have basically targets for each different month of the year. So that's how we determine if we're on track or not. So our goal generally is like if we look at just the way that we determine those goals is by looking at data and looking at like out of the properties in this neighborhood where we're invested in, the top performing properties that are similar to ours, what are they achieving? So in the summertime, that's 100%. Like you should just be at pretty much 99, 100% booked all throughout the summertime. And then in the low season, it can drop down as low as 50% in terms of the goal. Now we've been fortunate that we've been exceeding that. And I think a lot of that is just due to the boost that the area is getting because people can't travel internationally nearly as easily as they could before.
what about like from a management standpoint? Because it does sound really good in terms of like the cost, the price per night that you're getting. It's likely a little bit more hands-on than a long-term type of tenant, but what are some of the insights that you can provide from a management standpoint?
Yeah, I think for managing it, you really have to decide. There's kind of two routes you can go. Well, three routes, only two that I recommend. One is doing everything yourself, and that I just don't recommend because it is a lot of work. The second option is to hire a management company. So that's really the easiest way to go about it. You're obviously going to pay for that because they're going to take a percentage of your revenue as a management fee. But generally, it's a really good trade-off because you're essentially buying back like that money that you're spending on the management company. You're basically buying back your time that it would take to not only manage it, but also learn how to optimize the performance. Because if you don't go and actually educate yourself on how to optimize the property, then you'd be better off going with a management company because they could actually perform better than you and offset a lot of their management fees. And then the third option is going and learning how to optimize the property yourself and then managing it yourself with systems and with the right team members in place. So for us, that's what we do just because my background is in the property management side of things. And so we have a cleaning team that goes in there and they're really good and they're integrated with our software so that they schedule themselves and they're very, very low maintenance for us. And then we have a maintenance person, Tim, who's able to go on site and take care of any maintenance needs. And he's integrated directly with the cleaning team so that there's no broken telephone. The communication doesn't have to flow through us. And then the last is the guest communication team, who's going to be taking care of any of the guest needs and also just kind of being tied in with the cleaning team and the maintenance person for whatever needs the guests might have. And then the last component is really just the pricing optimization, which we just have a person on our team that does that for us. We've trained him. His name's Jacob. But that's typically the one thing that I recommend the property owner would keep on their plate because that's the high leverage thing. That's the thing that doesn't take a lot of time. It's something that you can plan out. You're not at the whim of other people's schedule. And you can, if you learn how to do it properly, you can do a really good job, make a lot of money doing that. But the management, the guest communication, and the cleaning are pretty low leverage activities that are better off having someone else do them.
Yeah, absolutely. I kind of do the option 3, like you're saying. I have a cleaner, a backup cleaner, a handy person, a backup handy person, and like your trades and stuff like that. And you can kind of coordinate that way. If you have a really good cleaner that has good eyes and is able to let you know when things go missing or things are damaged and can do the replenishing, it definitely saves a ton of time and money. What's the cost, just out of curiosity? You might have looked it up for the cottage country for the management fee, like if there was a company that were to take everything from start to finish.
Generally, it's going to be 20 to 30%. So it depends on what area you're in. If you're in a more rural area, then it can be harder to find management companies and you're going to pay higher rates, especially if the properties are more remote. That's when management fees can get a bit higher. But 20% is pretty standard and that's going to be for a management company. They'll just do full service management. So they'll take care of everything from A to Z. And essentially, if you're working with the right company, then all you're going to do is just get a statement at the end of the month that outlines everything that happened, all the income that came in, and it's going to detail everything and then a payment to your bank account. So it can be really streamlined, but obviously you are going to pay for that.
It's probably one of my favorite strategies, Airbnb and cottages, being able to enjoy it in between as well while it's making you money. Don't go anywhere. We'll be right back.
Hi, it's David from the Q Theta Fund. Do you know that you can invest in great businesses like Apple and Microsoft and earn 2 to 4% a month just by agreeing to buy those same stocks at lower prices than they're currently trading at? Owning high quality businesses over time is a proven way to grow your savings. Adding an additional 2 to 4% on top of that can allow your savings to grow that much more. At the Q Theta Fund, we use the same proven strategy. We invest in strong, identifiable businesses that continue to grow their revenues and profits. We add to this our Q Theta strategy by selling options on these same companies that allow us to manage our risk and enhance our returns by earning that additional 2 to 4% a month. Now, if you would like to invest with other investors who you watch on this show, then please contact me and my email address right here.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Welcome back. I hope you're enjoying the show so far. Before we continue with James, let's see what's happening in the world of mortgages. Kyle, over to you.
This week, as we await the announcement of the much anticipated rate increase, I've received many calls. Kyle, what's going to happen with interest rates? Whenever I'm asked this question, are rates going to go up or rates going to go down? My answer is always the same. Yes. Rates are going to do what rates are going to do. In this case, all signs are pointing to rates are likely going to go up. Maybe not this increase, but likely by the next one. What should you do? The question is always around payment stability or asset liquidity. If you're thinking you might need to refinance, sell, change your property type, pull out equity, it may not be the best idea to lock into a new fixed rate. If you're super nervous and losing sleep at night, absolutely you may want to consider locking into a fixed rate right now. One alternative I suggest is maybe not taking a 5-year fixed rate. Ask your broker or agent about 1, 2, 3, 4, 5-year terms, or for those of you who are super nervous, there are 10-year options as well. Generally not what I would recommend. When it comes to interest rates, make sure you're taking a holistic approach. Look at all the options, consider your short, long-term goals and financial needs and housing locations, amenities, etc. If you're looking for help on this, don't hesitate to reach out to myself and the Kyle Ford Mortgage team. Thanks, and back to you.
Thank you, Kyle, for the insight. James, we are going to now go through one of your properties, one of your awesome deals, Cottage Airbnbs. What deal is this?
So this is a property that we bought about a year ago and then just got it listed in time for summer of this past year. It's a cottage. It actually has 6 bedrooms after the renovation and 2 bathrooms. And so we can sleep 8 to 10 people pretty easily in there. Very nice.
So what was the purchase price of that cottage?
So that one we picked up for $520,000.
So $520. And where did you find this property?
We actually found this property. Yeah, this was on market. And it had been on the market for, I think about 60 days and it only gotten one offer and it was listed at 600. So we ended up coming in at about 550, if I remember correctly. And then after doing we had a condition for inspection. And so after doing that inspection, we then negotiated the seller down even further.
And that's a great point. And very, very often you can get a certain price and then the ball is in your court if you have the inspection clause to then go back and negotiate. And especially if they haven't received other offers in the meantime or other interest, they're likely to be more accommodating. So can I ask, like, what kind of shape this property was in at that price? Because usually it's pretty rough.
Yeah, it was in pretty rough shape, but nothing crazy bad. Like it was an older couple that lived there. They just got to the point where they couldn't maintain it, and then they held on to it for a few more years beyond when they could maintain it. So. But it wasn't like it had been trashed or been really ruined. It just hadn't been taken care of. So it just needed TLC and everything was very out of date.
Like a grandma special type of thing.
Exactly. Yeah.
All right. So why do you think it was on the market for so long though?
They priced it high. We talked directly with the listing agent. And so they had priced it high with the hopes of they weren't in a big rush to sell it. And they had put a lot of work into the exterior of the property, but then they had to sell it in the winter time. So all the work they'd done on the exterior, people couldn't really see it. And I think a lot of people that were looking at that time, as much as there were bidding wars going on when we bought it, everything was super competitive. The people that were looking for properties were mostly people from Toronto that wanted to buy a cottage that they could go to that summer. This was a reno project. It was another thing on the to-do list for people that were buying, not a relaxing getaway. So we were eager to go and put that money in because we could, and that time in, because we could then force appreciation, build some equity in the property. But a lot of the other buyers weren't, which is why I think it just wasn't getting any offers.
All right, now last question before we go into the next piece. Was this on water or was it slightly walking distance?
So this was like the dream come true. It was right across the road from the water. And it had unobstructed views of the water that will always remain unobstructed because the lot across the road is not nearly big enough to actually build any kind of a house on. So it's right by the water, access to the water right down the road at a boat launch, unobstructed views of the water, but it's not directly on the water, which meant that it was also less desirable for people looking for a cottage because they wouldn't have their own dock right there. And it means that we pay less property tax because we're not around the water.
Great point. Okay, awesome. Now, the down payment for this property for 520, what did you put down?
So we ended up putting down just over 5% on the property. We got 5% on the first 500 and then 20% on the 20,000, just under first-time home buyers. So we put about $30,000 into it as a down payment.
Okay, I mean, that's pretty good. So you worked with a good mortgage broker that can give you some insights on how to do that. And I'm guessing you qualified it as your secondary home?
Exactly, yeah.
Okay, or potentially primary home, depending. What were the closing costs?
Closing costs were about $3,000 on that one.
All right, so $3,000 closing costs. So that's your legal, your land transfer, all that good stuff. And then what did you do for renos?
So for renos, we redid the kitchen. We redid pretty much everything. And then the basement, it was partially finished. So we took it a little bit further, but we actually left a lot of it. Like we left the beams. There was exposed beams in the basement. So instead of putting a drop down ceiling, we just got someone to come in and stain those. And then we hung up some string lights. So it looked really nice. So we did a relatively inexpensive renovation all said and done. We ended up spending about $60,000 on the reno and then another $20,000 on furniture. And then that was for furniture. And then also we purchased a hot tub and then later a sauna as well for the property so that we could keep the property moving during the low months of the year as well and have something to attract people in.
That's a great point. I think there's many people that are on Airbnb as an example, and they specifically click in the amenities section for hot tubs. And so they're only going to see the properties, the cottages with hot tubs. And let's talk about that for a second, because there are going to be some properties that have no hot tubs, and there's going to be some properties that have hot tubs. There's maintenance, obviously, that needs to be done, right? Like, what's the best way to maintain a hot tub in a cottage? What have you found?
We just have our cleaners check it every single time there's a turnover. So they just check it. They make sure they're really good. Honestly, our cleaners are a bit of a godsend for us. Like they go out there, they check it, they make sure that it's set at the right temperature. They see if it needs to, like oftentimes just from different body lotions and stuff people have, it'll create foam in the tub. So we have some different chemicals to get rid of that, make sure it's chlorinated, make sure it's kept up well. And then every month or so, we'll just drain in the summertime more. In the wintertime, it's a little bit tougher to drain it out and then refill it, just with it being so cold out and it taking so long to heat back up then. But just regularly maintaining it and then draining it when necessary and just giving it a wash and refill. And
you might not know exactly what the numbers is, but what do you think it is like from an occupancy level for cottages without hot tubs versus cottages in with hot tubs, like off season? Obviously in the summer, you're going to get bookings regardless, but off season, is it a 30% occupancy lift? Is it a 50% occupancy lift?
It's tough to know for sure because there's so many other factors that play into it. But what I can say is that I was blown away to see that in December, we were able to bring in $12,000 or $13,000 on the property and kept it pretty well booked all through December. Like initially going into this, I'm running analysis and I'm looking at what's the worst case scenario. And I'm thinking if we can break even in the off season, then like amazing, that's great. Cause I know we're going to make money in the high season. I'm figuring if we can bring in $2,000-$3,000 in the low season, then great. And we're bringing in like 4 times that. So that really blew me away. It's tough to know what portion of that was attributed to the hot tub or the sauna. In a bit more anecdotal sense, I can say that a lot of people that are booking for the hot tub and the sauna, are constantly using the hot tub and the sauna. So I can only assume that it's playing quite a role.
Now you put 20 grand down for furnishing. What does that look like? Are you going to one store? Are you going to Amazon? Like if you could share maybe some insights on where you get your furnishings from.
On this one, we were trying to cut costs. So we did a mixture of Amazon, IKEA, and then Facebook Marketplace just for bigger ticket stuff. So for anything that was generally going to cost like over $500, we would look and see if we could get a good deal on Facebook Marketplace. And then everything else, we got a mixture of IKEA and Amazon. IKEA is awesome. Nowadays, they don't really have inventory, which is a bit of a pain, but they're awesome because I found that their stuff is really inexpensive, really durable, and very comfortable. So it's like a really good mix of things. But the challenge is that if you buy everything from IKEA, it looks like it in the property. It looks like IKEA, just like you're in a showroom in the property. So that's why I like to mix in Amazon, because you can get a variety of different stuff. Interior design was a really important piece for us. Like I actually had my girlfriend Christine help out with that. She did like a full like vision board and then interior design project with it, so that we could make sure that every area of the house was equipped with what it needed to, and that the stuff was good, it was comfortable, but that it also looked really good, because we know obviously that's going to make a big difference on getting people to book it.
Pictures sell, right? And nice modern design helps. What about, because one of the things that I do, so I go to StructTube instead of IKEA, similar I suppose, but it's not IKEA. And then I go to Amazon for like all the like cutlery and all that kind of stuff. And then what I'll do is I'll pick like 1 or 2 local decor stores, and then I'll sprinkle some of that in. Have you done that before?
Yeah, we actually did that on this property. Like one of the things that we got from just a local artisan person was basically like this paddle, and we had burned into it basically an outline of the lake that we're on, and then we named the property Buckhorn Bay Getaway. So we had it burned in Buckhorn Bay Getaway, and we put that in one of the bedrooms. Little touches like that go a long way, because like you spend maybe $100 or $200 on something like that. And then it just adds that real kind of personal touch to it.
All right, so that was the reno, and then you went ahead and you got an appraiser to refinance. Is that what you did?
We decided not to go through with the refi. We figured the ARV is about $640,000 right now. We decided not to refinance just because with the 5% down, after a refi, we'd have to go up to 20%, so it wouldn't make much sense. So we're going to wait a little bit to do the refi, but yeah, ARV is 640.
Okay, so what about the cash flow a year annually on this place? What are you getting?
So we haven't had it up for a full year, but right now we're just over $110,000 in bookings. We're figuring that we're going to end the year off at about 120, 130. And so our cash flow is going to be conservatively $60,000. All
right, so $60,000 cash flow after your expenses, the extra expenses for the hot tub, the utilities, the Wi-Fi, all that good stuff. What about the natural appreciation year over year?
I like to be conservative with it and just assume 2%. Things have been going insane, obviously, and like last year we saw, I think 30% in that area, but I assume 2% a year.
All right, so $13,000, and the mortgage pay down annually?
Mortgage pay down is $16,000 a year.
All right, so $16,000 a year with 5% down, so you've got $30,000 in, plus your reno, plus your furnishings, your closing costs. So you're essentially, what is your ROI?
I think when we ran the ROI numbers, we were about 243%, depending on how you look at it.
So you had a private lender as well, right? To cover some of the costs?
Yeah, so that was a big piece of it as well, is that we managed to get the $80,000 for the renovation and the furniture like we borrowed that money at 4% interest, and we figured with it being so cheap, we might as well do that. And so we factored the debt service on that into our cash flow numbers there.
All right, so if you looked at it with a private lending perspective, you're at 360% ROI, and then year 2 onwards, about 243%, which is your profit divided by how much money you have in the deal, which is about 35 grand, which is your down payment plus your closing costs, give or take. And that is a very good return.
Yeah, we're pretty happy with that. We're looking for more of those deals to rinse and repeat with.
Amazing. Congratulations. Are you going to keep doing these? Is this part of your plan, or are you going to switch strategies moving forward?
For sure. Yeah, we're going to keep doing this, because the nice thing is you have the flexibility to change it to mid-term if you want to down the road, do different things. But for us, it's great because like it's a lifestyle asset. We can go there and actually enjoy it when we want to. And the return numbers are honestly just kind of insane.
James, amazing. Thank you so much. Congratulations. And we're probably cottage neighbors with one of our cottages at some point. So we'll have to grab a drink in the summer while we are on our dock. Thank you so much for being on the show.
Absolutely. Thanks for having me.
And thank you guys at home for tuning in. Don't forget, same time next week. See you then.